You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 22nd day of May, 2024. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. Now, this is our second live broadcast of the day. We do 2 every trading day. The first one, our live training room. Now, that's a private broadcast, members only, and those who are taking our 1-week free trial. This broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. If you have not yet taken our 1-week free trial, you can do so by going to mytradingiq.com, and at the very top of the page, there's a link. It says 5-day free trial, no credit card required. All you have to do is click the link, complete the registration form, make sure you fill it out properly. It's an automated process, and if you don't fill it out properly, we don't get it. You don't get a free trial, and nobody wins. But if you fill it out properly, we get it, you get the trial, everybody wins. That's what they call it. That's what Tony Robbins calls a win-win-win situation. We just call it doing it right. Now, when the live training room ends each day at 11:30 a.m. Eastern, we do take a 30-minute break. Come back for this broadcast, the afternoon broadcast, which, as I said, is open to the public. Now, there's a couple different ways to join the afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com, and this time scroll down the page to where it says afternoon broadcast. Click that link, fill out that 30-second registration form, and you're done. Never have to do it again. What happens going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit of that is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you'd still like to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel, youtube.com/CFRN. Super easy to remember because you already know the YouTube part. So really all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can literally see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. And just pick some days at random. Watch a little bit, fast forward a little bit, go to another day, do the same thing, go to another day. You'll discover the thread of connectivity, the thread of continuity woven through each and every daily episode and our very vibrant trading community. youtube.com/CFRN. All right, let's get going with our daily devotional and a word of prayer, as we do every day. And then we'll get into the markets, and then about 12:45, 12:50, Michael will join us. He'll give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes, do a little live trading, and then I'll wrap things up with our good word for the day. Now, the topic of our devotion, and this particular topic will end tomorrow. It's been really a study on the book of James. The title, Faith Works. I used to pastor a church called Faith Works. All one word. True story. In fact, my wife and I planted that church. Okay. I'm going to share this scripture today, James 3, verses 13 through 18, from the Message translation. Do you want to be counted wise, to build a reputation for wisdom? Here's what you do. Live well, live wisely, live humbly. It's the way you live, not the way you talk, that counts. Mean-spirited ambition isn't wisdom. Boasting that you are wise isn't wisdom. Twisting the truth to make yourselves sound wise isn't wisdom. It's the furthest thing from wisdom. It's animal cunning, devilish plotting. Whenever you're trying to look better than others or get the better of others, things fall apart and everyone ends up at the other's throats. Real wisdom, God's wisdom, begins with a holy life and is characterized by getting along with others. It is gentle and reasonable, overflowing with mercy and blessings, not hot one day and cold the next, not two-faced. You can develop a healthy, robust community that lives right with God and enjoy its results only if you do the hard work of getting along with each other, treating each other with dignity and honor. Again, that was James 3, verses 13 through 18 from the Message translation. So you've got false wisdom and you've got true wisdom. The wisdom of the world is rooted in selfishness, while our culture disciples us to believe that our determination, our truth, and our happiness are the most important priorities in life. These ideas run contrary to God's Word. All people were meant to find their ultimate purpose and delight in God. True wisdom means we embrace God's vision of how the world works. 2 false beliefs drive all of your destructive behavior. Number 1, my life is about me. My happiness matters most. I am utmost in my affections. And number 2, no absolute objective standard exists by which I must live. All people have the right to their own preference and opinions about what will make them happy. Now, these 2 statements pretty much summarize the prevailing philosophy in today's culture. Let the implications of those beliefs sink in for a moment. Approximately 7 billion people live on the planet, and 7 billion people can't all be right. 7 billion people can't do whatever they want. 7 billion people can't all determine their own plans and paths to personal happiness. 7 billion people can't be at the center of the universe. This is a chaotic impossibility. And we know it's impossible, but yet we love the lie. What then is true wisdom? That's false wisdom. What is true wisdom? It is inseparable from good conduct. Faith works. Wisdom acts. Your actions reveal what you truly believe. Just as words are the fruit born from whatever is rooted deep in your heart. This is a dominant theme of James' epistle. We've already encountered this foundational truth in James 1:22 and James 2:14 through 26. It's easy to deceive yourself into thinking you've checked off all the right theological boxes, believing the right things about Jesus, but continuing to live according to a world view that's just like everybody else around you. If we are truly believers, Christians, what then is it that separates us from the rest of the world? Join me in a word of prayer. Heavenly Father, we come before you, thankful for the wisdom we just found in James 3. Lord, grant us the humility and understanding that comes from your heavenly wisdom. Help us to live lives marked by purity, peace, gentleness, and mercy. Guide us to sow seeds of peace and righteousness, fostering harmony in our relationships and communities. May our actions reflect your love and bring glory to your name. It's in Jesus' name, believe and pray. Everybody said, amen. Amen. And happy Wednesday. Let me give you the numbers from around the world. Cash markets, or the indices as they're called here in the U.S. Currently the Dow is down 51 points. NASDAQ is up 10. S&P 500 is down 2. The Russell 2000 is down 5. Now, we like to see all 4 of the major indices the same color. As futures traders, we don't care if they're all red or all green, but we do like to see them the same color, because when they are the same color, that's when we tend to get better follow through. Now, the markets are divided with the NASDAQ being in the green, but it's only 9.9 points. Now it just jumped to 11. I mean, 10 points in the NQ can go by like that. Now, is it possible that the NQ's leading the indices and they're all about to turn around and head north? I suppose. But I'd be careful and I'd be cautious. Okay. In the commodity basket, crude oil down another 88 cents today, trading 77.78 last. That's a drop of over 1%. Gold down $28.50, trading 23.9740 last. That's a drop of over 1%. Silver down 46 cents, trading 31.61 last. That's a drop of 1.5%, or almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei fell 329 points, almost 1%. Shanghai was basically unchanged. The Hang Seng dropped 25. And in the European markets at the close, FTSE down 46, DAX down 46, the CAC down 49. So that gave us a mixed day. Basically, it's a red day in Asia because Shanghai, while it's positive by less than 1 point, it's actually green, but it might as well be red. It was a red day for the UK, and there's only 8 points in the NASDAQ, keeping it from being a red Radio Wednesday here in the US of A. So we'll see which way the boat floats at the end of the broadcast. Keep in mind, we've got the Fed minutes this afternoon, and we've got some high impact news tomorrow. 2 o'clock is when the Fed minutes comes out. Sometimes there can be great volatility, other times not so much. Best position is no position when the minutes come out, unlike the FOMC statement, where it's just that. It's one statement. Traders can digest that pretty quick. When the minutes come out, well, now you got to do some studying. So let them come out, give it a half hour, and then proceed with caution. Okay? All right. Now, in the news today, this one's interesting. AI has already started replacing voice agents' jobs. Companies are exploring ways to replace the existing computer-generated voice models with synthetic versions of human voices. The company Truecaller, it's a widely known caller ID service, is the latest to take this approach with its announcement that it will now allow customers to use its AI-powered assistant to answer phone calls in their own voice. Huh, that's kind of cute, but that's about all it is. Now, this new experience comes via a partnership with Microsoft that allows a Swedish company to use the Redmond Giant's personal voice technology introduced in November as part of Azure AI Speech. By using Microsoft's personal voice, Truecaller's assistant, available to paid users, will be able to replicate users' voices in order to greet and respond to callers. This is in addition to the preset system-generated voice options available to users through the digital assistance feature that helps answer phone calls for you, screen unknown calls, take messages, respond on your behalf, or even record the call for your later viewing. Truecaller users need to record a script of a few seconds in their own voice to create a digital copy after giving their consent. This allows the assistant to start answering calls in the digital version of your voice, which sounds just like you. Now, I know you've seen examples of these deep fake videos. Well, I'm telling you, if somebody doesn't get on the stick pretty quick and come out with some kind of visual and audio watermark, it's just going to create chaos in the world. Typically, and they just need, for video, I think they need about 5 minutes of a person talking and moving and making motions to create a deepfake video. But for deepfake audio, I think 15 seconds of you talking in a normal voice, reading the dictionary, is enough. The company says, we firmly believe that the personal voice feature will revolutionize the way users manage their calls and elevate their overall experience with Truecaller Assistant. We look forward to further exploring the potential of AI-powered voice technologies in partnership with Microsoft and delivering even more innovative solutions to our global user base. You know, as in all things tech and internet, can be used for good or evil. Just like money. You got a $100 bill, you can use it to feed a hungry child or build a dirty bomb. Whichever way you spend it, the expression on Ben's face never changes. So the next time you call someone, you'll be wondering, is it live or is it Truecaller? Now, this is how fast things can change. Rush of fund manager interest drives metal prices to fresh highs. Wait, didn't I just say gold and silver are down tremendously? I did. Yes, I did. So I'm not even going to bother reading the whole article. Be careful what you read. Okay. Large U.S. companies are bolstering their adjusted earnings per share by excluding items such as litigation expenses and amortization of intangible assets from their net income, even as regulators scrutinize such practices. Somebody's found a new way to cook the books. The analysis compiled by data provider CalcBench and Suffolk University examined about 260 companies that were randomly chosen from the S&P 500. These companies took combined adjustments worth almost $182 billion in 2023, with an average value of $110 million per item, according to the data seen by Bloomberg. Average adjusted net income in 2023 was nearly $3.1 billion per company, lower than the approximately $4 billion in adjusted net income per company in 2022. Now, these big companies are forced to follow the GAAP, or generally accepted accounting principles. It's a set of agreed upon accounting metrics when they report their financial results. They can choose to provide non-GAAP measures in addition to that. The Financial Accounting Standards Board plans to ask the public by year-end whether it should define non-GAAP measures given the inconsistencies that can arise when companies use these alternative accounting metrics. That's just one more thing to keep you up tonight. Okay, U.S. stocks hovered near record highs on Wednesday, today, as investors waited for NVIDIA, their pivotal earnings after the bell today, and for more clues to the Federal Reserve's thinking on interest rate cuts. Stocks have managed to grind out new all-time highs this week as markets meandered in the wait to find out whether NVIDIA will deliver on sky-high earnings expectations. Investors are bracing for a big move in the chipmaker's share price and in other potential AI plays after the first quarter results set for release after the bell. It all adds up to a big test for the broader market as a whole. Investors will also get a second reality check in the form of the minutes from the Fed's last meeting. Just mentioned that earlier. Eyes are on any deviation from policymakers' repeated message that they want to be more confident of a cool down in inflation before starting to cut rates. But some nerves were rattled ahead of the release later Wednesday by UK inflation data, suggesting price pressures elsewhere are proving hard to dampen. At the same time, Target's quarterly results fed worries as to how the economy is holding up. The retail giant's earnings fell short as consumers held off from non-essential purchases, citing inflation. Its shares slid 8% this morning. Now, what if NVIDIA misses? I'm not saying it will. The whole world is expecting it to deliver a blockbuster number. Question is, will it? And that's something that you or I have absolutely no control over. You can gamble and bet it will, or you can gamble and bet it won't. Or you can wait to see what it does and then trade it accordingly. There's always a choice: gamble or trade. There's a huge difference. But you know that. Logic 247, 24/7 around the clock Emini alert service. We're in week 303. We've issued over 16,700 individual handcrafted alerts. And what we've averaged over the last 303 weeks, and over 16,000 alerts, is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week, markets have been flat. I had to literally force myself to put any alerts out. But I did put out 16, and at the time Valerie did the recap this morning, we were still waiting on the outcome of 8. So we had 8 actionable alerts, 1 stomp out, 13%. Perhaps the markets will loosen up after we get the numbers from Nvidia today and the Fed minutes. Now, as futures traders, we don't care if the news is good, bad. We can be long or short all in the same hour, long, short, and long again, if that's what the chart in front of us tells us to do. That's the beauty of futures. A little more complicated with stocks, but anyway. Long before we had Logic 247, we had our original alert service, the Concierge Trade Alerts. Now, both of the alerts are designed to help you become self-sufficient. If you want to trade for a living, that'll never happen as long as you have to depend on someone else to tell you when to get in and when to get out. It's just the truth. You've got to learn how to read the chart so that you know instinctively what the next high probability move is. And what we've proven over the last 303 weeks and over 16,000 individual handcrafted alerts is that 80% of the time, we know exactly what the next high probability move is. But no matter how hard we work, how hard we try, how much we analyze, 20% of the time the market does something different. Now that's a pretty big sample size. Mark Douglas said in Trading in the Zone that you need at least 20 trades to have a decent sample size to figure out if you actually have a definable edge. I wish he were still around. Be real proud to know that since the day he and I first met, and since he passed, we've compiled over 16,000 alerts in our sample size. What the logic alerts do, because I give you the entry price, the initial target, second target, third target, final trade to target, is by studying the chart. Now, if you're new to trading, the chart looks like chaos. But once you understand that price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again, it starts to get a little bit simpler. Trading's not easy, but it can be simple. When a logic alert comes out, draw a horizontal line at the entry price. Draw a horizontal line at the initial target. That right there is good for your goal for the day. And then draw a horizontal line at the second target, and the third target, and the fourth target. You do that enough times over the period of a couple weeks, maybe a month at the most, you'll start to see exactly what I see. I mean, it's right out there for everybody to see. But because you got so many indicators and oscillators and all this stuff and the trend and the tricks, and oh my goodness, I don't care what you're trading. I don't care what market, I don't care what time frame. The clock on the wall is always price. If that's all you had, you could trade that. Now, we do have a few indicators to make it simple. I stay with the most basic of indicators because I like it to be real simple. Once you master trading the logic alerts, then you step up to the CTAs. You see all those additional alerts on the logic? That just comes from me looking left at previous swing highs and swing lows. With the CTAs, you get to look left yourself. And it'll take a little time, but pretty soon it'll be just as clear to you as it is to me. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. But the CTAs are published as a static report shortly after the Globex open. So we know this is the Wednesday session. Began last night at 6:20. Well, the Wednesday session began at 6 p.m. Eastern. The report came out 20 minutes after the open. First thing you want to do when the report is published, go to the 30-minute chart of whatever markets you actually trade and make a note of where price is at this time. It's always going to be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. Pretty simple. BBC is just the green line you see on my charts. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. With the CTAs, now you're learning to look left yourself for previous swing highs and swing lows, which can become current resistance or support. And you're learning how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. And you'll learn how price behaves at a weekly trading zone. Only three things can happen. 70% of the time consolidation, 20% of the time rejection, 10% of the time slice. We've published the zone since December 14th of 2009. Closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. Do not change in any way whatsoever. So let's go see what's happening with the S&P. Okay. Now we know that our all-time historic high was back here at 53.49. Okay, we put in a new all-time historic high by one tick. Now we talk about this a lot. When you put in a new high by a little bit and it doesn't get any smaller than one tick. Okay. So we put in a higher high by one tick and then nobody wanted to bid it higher. So now the new all-time historic high is 53.49 1/4. Why? Because nobody was willing to pay 53.49 1/2. If there were, then that would be the new all-time historic high. Step line is crossed blue and climbing. So now we anticipate a retracement back to the BBC. When the Fed minutes come out today, we may get a spike to the upside, spikes to the downside. Quite often with these economic reports, when the dust settles, prices back where it was before the fireworks. But you got to embrace all possibilities. So we'll see what happens. Keep in mind that institutional traders, ones who actually move price due to the size they trade in, look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. Whatever you trade, it's a different futures market, individual stocks, crypto, Forex, ETF. Just spend 2 minutes with the daily chart before you start trading. In doing so, you're looking over the shoulder of the deep pockets that actually move price. But look at what we got for the last 1, 2, 3, 4 days. There's a day hidden in there. Yep, 20. So got 1, 2, 3, 5 days where we've basically gone nowhere. We do have a new all-time high though today by 1 tick. That'll probably change when we get the minutes and when NVIDIA releases their earnings. Stocks won't be trading here in the US, but futures trade around the clock. So keep that in mind. All alerts are created on a 30-minute chart. The vertical line separates today, Wednesday, here's Tuesday, here's Monday. When price rallies up to a weekly zone, we expect resistance. When it drops to a zone, we expect support. Up to a zone, resistance. Down to a zone, support. Up to a zone, resistance. Till proven otherwise. And then more resistance. Here's where we opened last night. And we made a run up to the target. And then we got back below the BBC. See, blue and climbing turned to red and falling. Once we spiked through. Now see, on this chart, you can't see the previous all-time historic high. That's another reason you need to learn to use multiple time frames. Okay. So while this high did take out by just a little bit Monday's high, it did not take out the all-time historic high right here. Now we have a new all-time historic high, 49.25. Okay. And then this was 49, right? 48.25. Okay. So we made it, we got 1 point above Monday. So there's Wednesday, Tuesday, Monday, Friday. Yeah, it was Thursday that we put in the all-time historic high at 53.49. And then today we added 1 tick so far, but I think that'll change. So it ran up to the long target. Then once we got below the BBC, after blue and climbing, turned to red and falling. That was our heads up. Now the pullback to the BBC holds more often than it doesn't, whether it's pulling from below or above. But eventually it will trade through. And that's exactly what it did here. And it came right down to the zone. The zone is 55.34/35. And the low was 34.5. So right in the middle of the zone. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. Remember, once they're published, they're carved in stone for the entire week. When the market finds support, it's going to go look for resistance, which it found at the BBC. The pullback holds more often than not. Resistance sends the market looking for support. So now we have a double bottom here at the weekly zone. Support sends us looking for resistance, which we found at the zone. Now again, all of our members and trial members had these numbers Monday morning, 6:15 a.m. Eastern. And they had these numbers, these targets, 20 minutes after the open last night. So we've gone from support, resistance, back to support, and we're consolidating at the BBC. If we take out this low right here, then you should have a pretty good opportunity from 53.36. The zone's 34.35. So you could go 53.30. What's this low? Yeah, it's only one tick. I don't know. I'll leave it up to you. You can see the window of opportunity. There are obstacles. Not over here, because this is already taking care of that. Okay, on the Dow. Here's where we opened last night. Ran right up to the zone overhead. Resistance. Resistance sends us looking for support, which we found at the short target, which were these lows defined yesterday afternoon. Support sends us looking for resistance. Remember, the pullback holds more often than not. Resistance will send the market looking for support, which it found here at these lows in yesterday. And then we get a bounce off of support, and it takes us up to yesterday's bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. Opposite's true of a bullish cross. Like here. Bullish cross, support. Okay. And so where are we now? Right at the BBC. All right, Michael's here, so we will pick up and finish this recap once he's done. So whenever you're ready.
Okay, here I am. I had trouble this morning again. My audio didn't work. I don't know what it is. And Bert was in it, so I was able to just log right back off and log back on, and it came back when I logged back on, but everything else worked. Anyway.
Did you unplug your headset and all that?
Yeah, I did all that stuff.
Okay.
All the normal stuff. Yeah.
Okay.
But
all right,
it's
looks
working.
Good.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the 22nd day of May. The 22nd day of May, 2024. So, if you have not taken a free trial lesson, you want to, go here to mytradingiq.com, click on the purple button right here. When you click on that, it's going to bring you to this registration page. Right on this page, all that we ask for is your name, your email, your phone number. Down here at the bottom, if you have Ninja, give us your machine ID. If you have TradingView, give us your login ID. Now, it's really important that you do that, because if you don't, you're not going to be able to get your indicators running. Okay. And you got to make sure you give us the right thing. Like, this is not going to be an email address, and this is not going to be a Ninja machine, a Ninja ID. Ninja IDs have hyphens in them and all that. The machine ID has no, it's just numbers and alphanumeric, really, but it's got no special characters. Okay. So give us that stuff and get your indicators indicating for you. All right. Now, today, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. It was another slow day today. We did manage to get into double digits in the number of trades, but well, it is what it is. Today was the 22nd day of May 2024. We made 34 ticks on the NQ. We lost 19 on the YM, and we made 12 on the Russell. Put us at 135 in the morning session. Today it took 16 minutes and 2 trades to get to the goal for the day. That was a 30-tick trade on the NQ that did that, and that put us at $2,550 with 17 contracts on. We took a total of 10 trades this morning. So on the month now, we're at $5,067. That's over 16 trading days, averaging $316 per contract per 2-hour trading day. On the year now, we've gotten our goal. On the year, we've gotten our goal in 97 out of 97 days. 100% of the days so far this year, we've gotten our goal. And we're almost halfway through the year. I don't know how we did last year. Did we get it? I think there were just a few days last year we didn't get it. Right? At the end of the year, 241, so 6 days last year we didn't get the goal. But this year, so far we're 97 out of 97. And we're at $38,802, averaging $400 a day. Now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month so far this year, you would have averaged, if you started with 1 contract in January this year, you would have been averaging $1,100 per hour right now, $1,160. I can't discount the $60. $60 per hour is a significant amount of money. That's $100,000 a year. It's $110,000 a year. You can't discount that 60. All right. But if you were to do it, if you were to do it like I did, started last year in January and added 1 contract per month, you'd be at 17 contracts now. And you'd be averaging $5,963 per hour. Okay, and that number is just going to keep going up this year. I don't remember what it started at the beginning of the year. I guess I left it up here, didn't I? Yeah, I did. Beginning of the year. We're at $4,617 at the end of, well, that's the end of February. The end of January, $4,943. End of January. Why did we go down in February? I don't know, it must have taken some time to take trades in February. But, well, last week it was at 61. It was over $6,000 last week. We had 1 really long day this week. This one right here. That will do it. That brings the hourly rate down. Anyway, let's get into the actual trades. I didn't have a ton of trades anyway, but we'll go through them. And I have some bigger picture stuff that I want to go through that I discussed this morning. And I know I had emailed one of you guys. I don't know if you're watching right now. No. Not watching right now, but you might be in a little while. Saying you should probably watch this because I went over it this morning and I'll do it again now in a little while. Anyway, our first trade of the day was right here. Not the first trade of the day. Our first trade on the YM was right there and it was a break even. Our next one was right here and that was a stop out, so that put us at -10. Then the one after that, we had a +1 to get us to -9, another break even, and then another stop out right there put us at -19 on the morning session. We went all sideways through here, and there was just 1 trade right here during the break. Now you had these black arrows in here. If you wanted to take them, you could have, but I wouldn't have. I wouldn't have done any of those black arrows. This blue arrow I would have done. I would have stopped out. That was the YM today. Not a whole lot going on. We do have FOMC coming out this afternoon. I'll get into that in a little bit in the bigger picture stuff here in a minute or two when I get to the when I get through this. All right, so this is the Russell. Now I accidentally had silver on here this morning. We were talking about silver yesterday and the silver micros, the SILN contract. I had that shown this morning, and that's a pretty good trading market. I'll show you. I'll peek at that in a minute here, but sometimes at night when the Asian markets open up, that can be a pretty good market to trade. Anyway, on the Russell, our first trade, our only trade, was right here. We picked up 12 ticks on that trade. And since then, there was 1 break-even trade. I'm sorry, that would have been a stop out there. And this may have been a break-even. It'd still be working right now. You'd still be in this trade if you didn't get a break-even on it. But that was it on the Russell this morning. Now we'll get into the EST. ES. Oops, wow, I went way too far back. All right, this is the whole ES right here. We didn't take a trade this morning on the ES. This is the whole ES. Now, once again, let's just drop this down to a smaller time frame. And again, if you're going to drop to a smaller time frame, you got to change the sensitivity to something less to accommodate the smaller time frame. And we'll see that really didn't produce anything more. Even in the smaller time frame, there was a purple arrow here at the open that worked out, a green arrow here that gave a little bit, purple arrow there that gave a little bit. Green arrow here would have been a break even, green arrow here that would have stopped out, green arrow here that would have given a little bit. So even on the 4 range today, there wasn't much going on with the ES. Let me fix that before I forget. And there. All right. So on the NQ, now, we will go back here. All right, I put these things on the NQ, so I was illustrating this morning how when it was looking left, when you're at the high of the day and it's looking left, there are no pivots left here to see. So let me shut those off right now. Okay. And they should shut off. All right, so our first trade in here on the NQ this morning was where we got the goal for the day. Picked up 30 ticks on that trade. And then the next trade, we had a break even, and the next trade over here, we had another break even, and we had a +4 ticks right there. Okay, and then we didn't have anything else. There are no other blue arrows in here. Some more green arrows, but no other blue arrows in here. Not even any purple arrows in here. Weird. All right. So it's a little after 1. I haven't started up the YouTube over here on this other monitor. I know Dwayne's already got it going, so it's been going for a while, but I want to log on to it myself so I can, hey, look, I got a little thing right here. So I can see the questions as they come in, or see who's asking them anyway. All right. Yeah. So before I get started in this this part of it, if you haven't taken a free trial and you want to, go here to mytradingiq.com. All right, mytradingiq.com, and click on this purple button right here. When you click on the purple button, you'll be sent to this page. Now, there is no credit card required to take a trial with us. All right, just fill out your first name, last name, email, phone number, fill out these questions, and down here at the bottom, it gives you NinjaTrader machine ID, not your NinjaTrader ID, your NinjaTrader machine ID. All right, it gives you TradingView login ID. Now, in TradingView, when you create an account, they give you the option to create an account with your email address or with some other ID. This is not an email address. This is the ID that gets assigned to you. Whether you create it yourself or whether they assign it, this is the ID that gets assigned to you in here. That's what we need, okay? You get that from right here. Like ours is CFRN, okay? That's what we need. But that's how you take the free trial. Once you do that, we'll send you everything you need to get going in the morning, all right? All right, so we're right in a no trade zone. All 4 of these markets are in no trade zone right now. So we don't have a darn thing that you can do with that. And you know, if it doesn't give anything up, it doesn't give anything up. You have to go look at other things. So let's go look at something else. Look at the Bitcoin today. And I want to look at Bitcoin a little bit here because I want to do a little bit of analysis that I usually do. I've been saying, this isn't Bitcoin, but I've been saying Bitcoin is doing what it did before, but on a little bit bigger basis, a bit bigger scale. What it did back here, when it put in this new high for, you know, it hasn't had a new high in a long time, it happened right there. Came back down, went down, it's doing almost exactly the same kind of thing. Like that, this right here is what happened a couple of days ago. That's this right here, okay? This thing right here is what happened a couple of days ago. So it's gonna take one little thing that's gonna make this thing shoot up, and you know, right here is where I thought it should get up to. And once it gets through there, breaks through there, then this is new all-time high. Above here will be new all-time high as well, but this is where I think it's going to go to, right up there. Okay, I'm sticking to that. Now, I had said that I was going to show you some things on a larger time frame, and I want to get into that a little bit with you right now. We don't really have any trades going on here right now, so if we did, I'd trade them, okay? But while we don't, let's look at the stuff that we looked at this morning. Now this I started drawing the other day. You guys may remember. You may remember when I talked about this thing that my teachers used to draw that I couldn't do when I was still. I'm still having trouble doing it. It's upside down. It makes it even worse. Okay, this thing like that my teachers used to draw that I couldn't stand. In math we used to have that too. That thing on the side. Anyway, I was saying that this is what was happening when it was happening over here. I was saying that this is what was happening, and we should expect this leg up. And I was using this leg length right here, which I gathered from over here to determine that. And from there, I said we should have a pullback, and then it should go up to this level right here. Okay. Well, a couple of things happened. It exceeded that. And let me stop drawing all of this with the big yellow thing. I'll erase this. So a couple of things happened. Okay. This is the leg length we were drawing with. And we pulled that from over here. Okay. And we pulled it from over here as well. But we used it again over here. And I think we actually pulled it from further left. But then we put it here, and a couple of things happened. It ran through that a little bit. So the pullback didn't go down to where I thought the pullback was going to go. And so that pushed this level up higher than where I thought it was going to go. Okay, it went there. Now that's okay. Where that is good. I thought it was going to get up to there, eventually get up to there. But now that level is moved up to here, okay, because in here, it pulled back down to here. And from here, it ran up a little farther than what I thought it was going to up here. So that makes this pullback a little bit higher. And that makes this the next level it should get up to. Okay, now there's a couple of things going on here. I noticed this morning. This morning all I had was the BBC on here. I didn't have the MA1 and the black step line on here. But you can see that the MA1 and the black step line are important, and prices right here at the weekly trading zone and at the BBC. Now this morning we were over here, right? We were over here this morning, and I was saying this morning I thought that this is what had happened already, the cross of the the black step line and the MA1. And I said, if that happened, it's going to go down to the BBC. Well, now that has happened, and it has gone down to the BBC. But right now, this should hold. There's a lot of stuff right here that should hold this. And I was saying then, when price was back here, that by the end of the day, I think it's going to bounce here. I'm going to end up here by the end of the day. But that's just what I wanted to show you, because the way that this has come together, I drew these trend lines in here to make it that it's in a channel, and it's an expanding channel, so it's going to expand to the upside, and that would just make sense for everything that's happening. If we crunch this up like this, you see we had this huge leg right here, all the way up to here, and then we had this pullback within that leg. If you take the leg length from here all the way up to here, and you stick that over here, all the way up to there. Do we have another zone above that? We do not have another zone above that. Okay, we only have a couple of days left. I don't expect it's going to get up there this week, but next week. If it continues moving up, sorry, let me undo that. If it continues moving up here this week, like I suspect it will. I mean, I could be way off on this, but we have FOMC minutes coming out this afternoon at 2 o'clock. In less than an hour, we have FOMC minutes coming out. And that should be something that moves the market. Okay, it should be something that moves the market. And if it does move it up into this space right here and it pulls back, then we'll just have more of this up and down stuff. But eventually, I think it's going to get up to here over the next week or two. When next week's weekly trading zones come out, I don't know what they're going to look like. I have no idea what they're going to look like. but I bet we get one that's up here somewhere. You know, the range has been kind of tight this week, so I don't know, it might not be, but we'll see. Anyway, that was my bigger picture look at stuff. That's what I was thinking this morning. You know, when I started looking at that this morning in the first half hour, and I thought that very first candle in the first half hour was important, where that close was important. And when we had that cross of the black step line in the MA1 on the 30-minute, it brought it right back down to the ribbon, right back down to the BPC, which is what I was expecting. Okay, so here we are. It's 109, and right now we're completely flat there, completely flat there, completely flat there. So we need something to move here. Okay, we're out of the no trade zone, at least on this one. But you know, we had the green arrow here, but the outer bands are just flat. You don't want to take that trade. There was some stuff that I went over this morning. Those of you guys who went to that meeting yesterday afternoon, I'll show you. If you went to the meeting yesterday afternoon, where's my telegram? Here it is. Now, yesterday afternoon, the meeting that I had was about the TV trades. And in that meeting, I was talking about options. And so this morning, we had this alert this morning right here on Meta. I had one on Microsoft too, and the Microsoft one went up a little bit, then it went sideways. The Meta one actually started to move. So if you follow the Meta one from the first indication right here, the 470s, you can see right there, they're at 440 by 460. And a couple hours later, they're here at 540 by 555. Okay, and I'm not sure if I go over here and look at it. I don't know what that is at right now, but I don't know if it's gone up some more or this is not Meta. Meta, here it is. Looks like Meta, it went down a little bit since then. Okay, so it probably peaked here. But I put an explanation here about the whole thing. This is on the TV Trades channel in Telegram. Okay, anybody can join that if you want to. But if you follow up from the screenshot, when I went over the meeting yesterday afternoon, we had a long indication of Meta. Right after the open, the 470 calls were 440 by 460. That means it would cost you $460 to buy one. And a couple hours later, the same 470 calls were 540 by 555. So you could have sold that 460, that one that cost you 460 for 540 a couple hours later. Okay, I explained all that down there. But now that was a 14.8% gain doing it that way. And that's just with the stuff that I actually managed to take a picture of. Okay, the range was actually better than that. So you could have gotten better than that, possibly. While the underlying stock made a gain of 0.3%, less than 1%, went from 469 to 471. I just wanted to show you the power of using the indications that we have. And you know, with everything that we do in here, you have the same stuff at your fingertips. Everything we do in here, you're using like the Logic 247, the concierge trade alerts that Dwayne gives, and he gives you a big picture trade with a target. You know, like let's look at one of his recent ones here. That's a discussion group. I don't want to look at the discussion group. Here's one right. No, that's the weekly trading zones. Is that it? No, that's the option channel. Hang on, I gotta get the right channel. Oh, here it is. I went right over it. Here it is. Okay, so if you take one of these right here, the ES, for instance, well, this came out, well, these are this morning. I want to do something from last night. Something from last night. Okay, so last night the NQ had a buy at 18,818. Okay, 18,818. Now we've retraced some of that, but that was, let's crunch this up. That was last night when price was, what time was that? 6 o'clock. It's right in here. Okay, I had a buy last night of 18,818. I was said to buy up here 18,818. And if you would have bought it here at 18,818, I'm trying to find where exactly that was. Was it in here? That's 2,100. Okay, well, that one didn't go very far. It did go far enough to hit the goal, but it didn't go very far. But anyway, I guess what I'm trying to say is the longer term things that Dwayne gives, when he gives you that, he gives you a target. Like the first target is the smaller target, and then he gives you an extended target. Those extended targets, when price starts to move towards those extended targets, the underlying options are going to increase dramatically. And we do it here with futures, and you can buy options on futures as well. But another thing you can do that people don't normally think about, instead of buying an option, you can buy a micro, and you don't have the same time decay with a micro that you have with an option. Okay, with options, the things that go into the price going down over time. Time decay is one of the biggest things as you approach the expiration date. With a micro, it's not that way. Futures, they don't go down because you're approaching the expiration date. Anyway. Wow. I talked a lot about nothing, and we still don't have a single trade. It wasn't about nothing. It's about a lot of important stuff. I'm sorry, it wasn't about nothing. It was about stuff that was like unscripted. Not that anything I did was ever scripted, but it was really unscripted. It was a rabbit hole. I just went right down it. Right. If anybody has any questions about anything that I've done, please let me know. Okay. I'm happy to look at any symbol you want. But the NQ is starting to separate in the outer bands right now, so I'd look for a nice pullback here on the NQ. The YM starting to agree with the same thing. So my bigger picture is that the NQ is going to go up by the end of the day. The NQ is going to move up. So with that in mind, I would be thinking, let the long trades run and treasuries stop pretty close on the shorts. That's the way I would work with that. Okay. All right. Well, hopefully we do trade there. Nobody has any questions, really? Not a single question from anybody? Nobody. All right. Well, let's see. We just need to pull back here. Pull back here, going sideways there. And we're starting to move up a little bit here, but we're in a no trade zone still. It's going to have to really move up a lot. The Russell would have to put in a higher swing. Okay. Now, let's go and look at the SILN. I think microsolar futures. Yeah, that's it. SIL. It should be the end contract. I think that was right. Now, the thing we had to do with this yesterday was make the sensitivity really small. Okay, and so this is what I had on my chart when I started up this morning, and I thought it was a Russell, and I could not make sense of what it was saying here. Well, you can see it gave some pretty good opportunities this morning. What I really wanted to see was what it did last night. because I wasn't watching it last night, but I know when I first looked at it yesterday, when Jack asked me to look at it yesterday, was when the Asian markets opened up. Right in here, look at that. Ding, 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 ding. Now this is the micro, the silver micro, and it's $5, $5 a tick for the silver micro. Okay, and the liquidity on the silver micro is about the same as it is on the YM, the Russell. Liquidity is about the same, so it's tradable. Now I don't know what it's like at this time of the night. Well, that's actually in the afternoon, but at this time of the night, I don't know what liquidity is like. Maybe I'll try to look at it tonight if I happen to be around when it's like that. I probably won't be though. Does anybody know what the liquidity is like? Jack, are you in here today? Jack is not in here.
You can change it to, I just added the volume.
Oh
indicator.
yeah, I guess just add the volume down at the bottom. You're right, Dwayne. I didn't even think about that.
You got to change it to a time-based chart.
Well, it'll still show the volume on a range chart.
Yeah.
Yeah, but you're right. Add the volume. Why didn't I think of that? Yeah, some silly things I have not been thinking of that should be obvious to me. Okay. I'm going to put it down. I'm going to put the volume down at the bottom. It's easier to read down there. Move to new pane below. Okay, there you can see it. It's easier to read down here. All right, so the volume at this time of the day with a range bar. I mean, the thing about the range bar is you don't know how long it's going to take. That's why putting it on time based is what you were saying. You can see how much there is per minute, or like a 3-minute time period. You can still see it on the other one, but you can't really judge it. Look at how much volume there is here. That's when the volume really picks up, is when the Asian markets open up. Look at all that. All the way through. So the volume dies off around 3 o'clock. It's pretty good right now, from like 8 to now. And then it dies off and picks back up when the Asian markets open up. And look, this volume with the Asian markets, if we put it on an hourly, I bet it's even better then than it is right now. Right, this is what it's like right now, and this is, well, I guess not. It's not better than it is right now. Okay, 10 o'clock is when it's at its peak most days. 10 o'clock is at the peak. But that's not bad. That's not bad. All that volume right there is good. That's interesting. And this is right now, in the hours right now. There's been a lot of volume in the silver lately. This is a lot more than normal. Seems like the micro silver. Now, what if we just go to the plain silver? Just do SI. Is it the end contract doing? I think it is. Okay. This is just regular silver. So the regular silver just got more volume. It's got like twice as much volume, but still, the timing is the same. It's actually off. The timing is a little more in this one than it is in the micro. At a little bit sooner. Seems like the volume picks up a little bit sooner in the regular silver. Interesting analysis. This silver is $50 a tick. So that's what Dwayne is always saying. It's $5,000 a dollar, because each dollar is a cent. So it's $50 a cent. It's 100 cents in a dollar. But if you knock that down,
2 pennies go for the day.
that is it. 2 pennies in silver is gold.
That's in the full size silver.
Yeah, full size silver. I mean, you don't want to trade that on something like this. You probably don't want to trade that on a 7 range. If you trade it on a 4 range, I don't know what it looks like, but we'll see. On a 4 range, in a given day, you got a green arrow off the ribbon right there that gave a couple of pennies, right? 560 to 565 to 570, 580 gave 4 pennies. That would be enough, but your stop would have to be 5 pennies. If you're on a 4 range and you filled right here at the proper place, your stop would have to be 5 pennies. It'd have to be down below this bar, okay, into the trade. And that kind of leads into a conversation that I had with somebody the other day. I'm trying to remember who asked me the question. One of you guys asked me the question about going to a larger time frame. What should your stop be? And it's really is proportional. The size of the bar that you're in. If you're in a small bar, that's not that bumps around a lot, like, the ES, for instance, you're on a 4-tick ES bar. You stop on a 4-tick ES bar. I say for the 4-tick ES, use an 8-tick stop. It's 2 bar lengths, because that's what usually keeps you in the market, right? But if you had like a 100-tick ES, the difference is huge in the amount of volatility that you have. So you would only have to have, like, if you had a 100-tick ES, it wouldn't be a 200-tick stop. It wouldn't be a 2 bar length stop. It'd be like, a 1 1/4 bar length stop. You'd have like 125-tick stop, or maybe 110-tick stop, because you don't have the same kind of volatility. So you don't have to account for that in your stop size. This is setting up perfectly right here for a trade. This would be a blue arrow short right now if you gave it down close. If I had everything turned on right, it'd be a blue arrow short if you gave it down close right here and pulled out of the overbought. Even if it didn't pull out of the overbought right now, it'd be a purple arrow short if it stayed red on the outer band, which is a super high probability trade anyway. There it is. Did it stay? It didn't stay, so it's a blue arrow short. It's right there on silver. That's a short right there. If I had it open, I could put it on. I don't know what the margins are on silver. I probably couldn't do 17 contracts on silver now. The margin's probably like 30 grand. I don't know what I have to have, about 700 grand in my account for that. I don't know what the margins on silver, the regular silver. Let's go look and see. Silver. Oh, they're not that bad. Okay, we could do that. Oh, they're going to be a lot more than that. But so right here, the silver, it just gave that down close right there, the blue arrow down close. And if you got filled right there at 85, or even if you got filled right here at 80, it just dropped down to 65 for 3 ticks in profit. If you just took 2 of those ticks, if you didn't fill right there when you filled there, and you took 2 ticks out of the middle of that, that's the goal for the day right there. It would have just happened on silver. All right. Just sorry, I got totally down in that rabbit hole today. I'm so sorry. But it's okay. I think you guys kind of get it. All right, so we don't have anything else happening here. And I want to go out here and look at something. Now, Meta's given up some stuff right here. And that's okay because it went enough to get a good gain. I don't know why this, is it the bar type? Let me switch this back to this kind of bar. That's what it is. It was the bar type. So this should be on the meta. I want to use this kind of bar. And I want it on a 5-minute. I don't know, something's a little off. But anyway, I want to look at the ES anyway. This is what I want to look at. The ES on the M contract on a 7 range today so far. So far, pre-market gave that long trade. It gave 1 trade here that didn't work. It gave another trade here that did. 1 trade here that did end up going enough to get your stop to break even, and that would be it. Actually, that would still be going because the stop would be down here on this. So unless you moved it to break even right there, it'd still be going right now. I was just looking at that because yesterday one of our guys said he didn't get any trades on the ES, and we had some really nice ones yesterday. We had this one, this one, this one, and this one yesterday on the ES. Anyway, back here. Okay, we might have something here on the NQ, something that we can trade here on the NQ. I know we're running out of time right now, but we still might get a trade here on the NQ. Okay. We need the up close on this bar. Now, an up close on this bar, if we get the up close, it hasn't hit the black line, so it's a valid trade no matter what. 1975 is what I'm buying on that. Here it is. I just put the order on. It hasn't filled yet, but 1975 is what I'm going to buy, and it only slipped me 1 tick, which isn't bad. Okay. Now, this is a valid trade even if it doesn't come out of the oversold, it's going to get up to 22 for me to hit break even. But even if it doesn't come out of the oversold, it's a valid trade for a couple of reasons. I want to point out to you in a second. I don't want to miss my chance to hit break even on this. Right, we're so close. It's going to go. It's going to go up to 23. Hopefully now. But if you look at the trade rules on mytradingiq.com, look at the trade rules. This would be a long trade without the slingshot. Okay. Now you don't get a purple arrow because the outer band is not blue. If the outer band were blue, then you'd have a purple arrow on this. Okay. Now it's going to drop. It's going to drop down to 1650. My stop is 20 ticks away. 21 ticks. 20 ticks away. Oh, now I dropped to 1575. Well, this is our only trade that we had a chance to take. It almost went to the spot 2175. It had to hit 22. It went almost to the spot where I would have bumped my stop to break even. Darn it, nope, it just stopped me out. Okay, well, it was so close. That one tick of slippage that I got was the difference between getting a break even and getting the stop out on that one. Oh well. Wow, I talked through the whole thing. And you guys didn't ask a single question. Oh, let me go through this one more time then. If you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. When you click on that, it's going to bring you to this registration page. Just fill out this form. Make sure at the bottom you give us your machine ID if you have one. Give us your TradingView login ID if you have one of those. Okay, when you do that, we'll be able to enable the indicators for you, and you'll be able to get everything indicating on your desktop. Right? That is it. With that, I can pass back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Thanks.
Recap of the morning session.
Today it took 16 minutes and 2 trades to get to $2,550.
Good job.
Thank you. Good.
All right, guys, we were on the Dow when we left off, and we opened, ran up to the zone overhead, which we expect to be resistance until proven otherwise, and it was. Blue and climbing turned to red and falling. That took us through the BBC and took us down to the short target to the tick. Support always sends a market looking for resistance. Pull back to the BBC holds more often than not. So that resistance sent us back to the target, once again support. And here we caught a bounce, but we didn't make it all the way to the BBC, so that's a sign of weakness. So we traded through the target. We hit these lows right here. That support, which was defined yesterday, bounced us up to bearish cross from earlier in the session. Whenever you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance, and it did not disappoint. So that sent us back below the BBC, and go look left. We'll find out exactly why price stopped right there. Support sent us to resistance, and we got 2 wicks. Pullback held, pullback held. Blue and climbing is turned to red and falling. So the most likely thing at this point is prices. Trade 39,900 to 39,880. That would be 20 points. That would be good for your goal for the day. Or after looking left, you got room to work with here before you get to the next zone. On the Russell, here's where we opened last night, above the BBC. And there was enough room right there to get your goal for the day. And then we leg and a retracement. Price always reverts to the mean. Pullback holds more often than not. And the very next candle took us all the way to the long target. Resistance will send the market looking for support. We traded through the weekly zone and we found support just below the target. Got a little bounce. Got to pull back to the BBC. Now the zone is 2094/2095. So we found support at the zone. Here's 2095. The zone itself is 94/95. So that was our support. Support will send the market looking for resistance. And we went from resistance to support, back to resistance, back to support, back to resistance. Now we got blue and climbing, BBC, the step line, all jumbled up here. I would not do anything until break out of this congestion. Yesterday's high at the zone, yesterday's low at the zone. On the NQ, open at the zone. We attempted to make it to the target, but we ran into blue and climbing. When blue and climbing gets directly above price, it's quite often resistance because it's on its way to becoming red and falling, which is bearish. And it was consolidated for about an hour and a half at the zone and the BBC. Then we made our drop to this predefined area yesterday. Didn't make it all the way to the short target. That support took us back up to the zone, pull back to the BBC, and then a run to the long target. Resistance sends us to support at the weekly zone and the BBC, which sends us back to the target again. Right now, when climbing is rolling over, about to become red and falling, so I would anticipate lower prices. I would let price get down to 18,772. From 72 to 62. That's $200 per contract traded. And it's probably going to happen right here, right now. 72, 62. Low so far. $67. So 10 points is $200 per contract traded. 5 points is enough to give you your goal for the day. So after this pullback, probably push right on down. Probably to this low and possibly down to the short target, which is where the bullish cross is. Crude oil, we are on the July contract now. Yesterday's low is right at the zone. Here's where we opened last night, below the BBC, and we basically just headed right down to the target. Spiked the zone, found support. Go look left, you'll find out why. Got a bounce. It's high. There. Sends us back down to the zone support. Sends us up to the zone resistance. Sends us down to the zone support. Then we put in a lower high here. That's a sign of weakness. Got a high, a lower high, a lower high. So 77.70 is not the lowest zone. It's down at 76.35. So 2 days left in the week. Zone to zone, back up to the zone, down to the zone. Now we're just struggling sideways. Gold. We opened here last night, ran up, tagged the long target, spiked it a little bit, and came right down. Next candle hit the short target. And then a whole lot of wide-ranging consolidation. And this little wick sticking up above the VVC. That should get you thinking, the market's weak. Below the VVC, we expect lower prices. So that wick right there, where did it take us? Down to the zone, where we found what? Support. Support sent us to resistance. Resistance sent us. The zone here is 2384/85. And the low was 85.3. So we came within 3 ticks. Hitting zone. Okay, silver. Here's where we opened, ran up to the zone, consolidated, and that sent us right down to the short target. Support sends us to resistance, back to support, back to resistance, back to support. Now the support here, there it is, sends us up to resistance one more time. So now we got to go look for support. And where do we find it? There. So we get a little bounce up to red and falling. Step line has crossed. So there's the potential for price to pull up to the BBC. You want to see price get above the step line. And then once you get to the BBC, then look for an opportunity short. Euro. Here's where we open. Ran to the target. Back to the BBC. Ran to the target again. Bearish cross. You have a bearish cross that leads to an extended move. The first time price revisits that area will almost always be good resistance. It was. And it was. Then price dropped through the zone right here. And then it sliced through, and then it retraced to the zone it sliced through. And then continued in the direction of the slice, all the way down to the target and to the zone. There's still one more zone below on the euro. Be careful shorting here if we get below blue and climbing. So you got potential support there, there, and there. One last look at the daily. We now have a red daily candle. We just hit the short target. And pretty soon, in about 18 minutes, we're going to get the minutes of the last Fed meeting. So the best position is no position until the market appears to be preparing for something negative here. I mean, we're dropping pretty quick. So careful out there. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. As a passport holder, you get 2 hours of live training in an interactive environment every trading day in live markets. You also get one-on-one private mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you get the Logic 247 alerts, the concierge trade alerts, weekly trading zones. You're able to attend the Thursday night members only workshop, all that and much more. It really is everything a trader needs, all under one roof, one low price. MyTradingIQ.com. Good word for the day. Navigating life's losses. Ecclesiastes 3:4 says there's a time to mourn and a time to dance. God's word neither ignores nor minimizes the painful realities of life. Inevitably, we and our loved ones will experience life's losses. Illness, aging, death, divorce, disability, loss of independence, unemployment, financial reversals. You get the picture. Today's culture prepares us for gain, but not for loss. To dance, but not to mourn. Major losses throw us into uncharted territory. So we need to understand the dynamics of our loss in order to help us through it and back to living again. Life-changing loss begins with bereavement, the agony of feeling that something or someone indispensable to us has been ripped away, leaving us feeling robbed. Then comes grief, searing emotions of overwhelming sorrow that are often accompanied by anger, stress, confusion, and helplessness. Next, we move into the mourning stage and begin to express our grief and loss. This is the hard work stage of tears, memories, and heartrending spasms of weeping that shake us to our very core. We feel guilt and remorse over what we have said or done, or what we have not said or done. Our heartache gives those around us the opportunity to respond, offering the comfort and reassurance we need to begin healing. This is God's protocol for healing broken hearts. At the age of 120, Moses, the Israelites' beloved leader, died, leaving behind him a grief-stricken nation. God allowed them 30 days to mourn their loss and to comfort one another before resuming the business of life. So take the time you need to do the work of mourning your losses, because Jesus said in Matthew 5:4, "Blessed are they that mourn, for they shall be comforted." And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.